Hey everyone, welcome to episode 12 in my monthly series where I review my high yield dividend stock picks of the month from a year ago. So on this YouTube channel, I have a very popular series, monthly series called Top 3 Dividend Stock Picks of the Month for High Income, which I have been doing for 2 years now. So in this video series, I give you guys my opinion on which 3 funds I feel are undervalued and a great time to pick up for the current month. So this monthly series here is me going back to review those stock picks 1 year later to see if I was right or not. So doing this really holds me accountable for my stock picks and further proves that I am always completely honest and an open book with all of you, which I know you all appreciate. And honestly, it's also to satisfy my own curiosity, of course. I know some of you disagree with my stock picks, so this is a way to see what actually happened 1 year later. So it's time to review my stock picks for the month of March 2021. I will not only check the share price, of course, but also the status of the dividend or distribution, which is much more important for us passive income investors, right? So was I right? Was I wrong? Let's find out together right now. I just want to take a quick moment to thank the sponsor of this video, Harvest Portfolios Group, one of my favorite Canadian fund managers who really specialize in income-oriented ETFs or covered call ETFs. I own many of them myself, and they actually just released a brand new all-in-one income-oriented ETF called the Harvest Diversified Income ETF. The stock symbol is HDIF, which targets an 8.5% yield annually. So make sure to check out their website and their fund lineup. The links are in the video description below. All right, let's get started. So pick number 1 for March 2021 was HUTL, the Equal Weight Global Utilities Income ETF from Harvest Portfolios Group, our sponsor for the month, the whole month of March, actually. So I really like this ETF. It holds 30 global utilities companies. So when you hear utilities, think electricity, telecommunication, and pipelines. And of course, to enhance the yield, they use a covered call strategy. So during the stock pick, during the time of the selection, it was $17.60, which was giving you a yield just under 8%. Really, really good for utilities, which is a very defensive sector. So my key points and reasoning for this pick, it's amazing diversification in terms of sector and region, right? You have not only telecommunication, you have electricity companies, you have pipeline companies as well. And this is, these types of companies are more stable, they're less volatile. It's what we consider a defensive sector. And as you can see, even the regional diversification is awesome. It's not just North America. You have it all over the world, a lot of Europe exposure here. And another good point for this ETF, it has a very low management fee compared to other covered call ETFs at only 0.50, really, really low management fee. Second pick was CGXF, the Gold Plus Giants covered call ETF from CI First Asset. So this ETF, just like the name says, holds 15 of the biggest precious metals companies in the world. So things like Endeavor, Barrick Gold, Newmont, Franco-Nevada, etc., etc. And of course, it also uses a covered call strategy. So on the time of the pick, it was $11.45, which would give you a yield of 12.58%. Of course, don't forget that this yield is based on the last 4 distributions. CI First Asset is a covered call manager that provides varying quarterly distribution. So it's always a little bit hard to track the yield because it changes whenever a new distribution comes out, basically. So my points and reasoning for this one, it had great value because during the time of the pick, stock markets were going up, which means gold producers and miners go down. So that's what you want to get into, guys. What's going down, not what's going up, right? That has the most value. So this ETF holds only the biggest producers, no penny stocks in here. So you have the list on the side there. Like I said, Newmont, Wheaton, Goldfield, Franco-Nevada, Barrick, Yamana Gold, etc., etc. And of course, like we all know, and it's happening right now, gold, silver producers, it's a hedge against future stock market crashes, volatility, and inflation, which is exactly what's happening now. I'm really happy about this pick, obviously. So also, as you know, covered call ETFs perform very well during stock market crashes and volatility. And the income that this ETF provided in 2020 is proof of that. Why do I say that? Well, because in 2020, when the stock market was tanking, this ETF increased or provided very high distributions, higher than normal. That just proves how the cover call strategy shines during volatility. And this ETF is really designed to hold long term and really to collect that passive income. And yeah, you could see here the 2020 total distributions, $1.44. Compare that to the last year's, you could see it's a lot higher. Third pick is a single REIT. Nexus REIT, nxr.un. So it's a small cap Canadian REIT, which at that time recently graduated to the TSX from the TSX Venture. So it owns everything, a bit of retail, office, but mostly industrial. It's focused on industrial. So at the time of the pick, the stock pick was $8.12, which would give you a pretty nice yield of just under 8%. So my thoughts and reasoning, or my key points in reasoning, that this REIT really focuses on industrial properties. The recent 4-to-1 share consolidation after the graduation, they kept the same dividend, right? They just increased it from 16 cents a share to 64 cents a share when they graduated. So they just multiplied it by 4. So they kept the same dividend. It's a growth-oriented REIT. They recently announced a lot of industrial property acquisitions, and they continue to have done so in the last year. So I felt there was a strong chance of dividend increases. Very high yield of over 7%, and this REIT at the time had a very good payout ratio of only 82.4%. So the distribution was well covered. And it was also a great candidate for the DRIP, because they do offer a DRIP discount of 4%. So let's check out the report card now. Those were the picks of the month. Let's see how I did. All right, it's time to check out the report card for March 2021. So let's start with HUTL. The price now is about $19. So you have a modest increase of 7.95%. The dividend unchanged. It's been unchanged since the beginning for this one. So, we can't expect anything too crazy in terms of increases for utilities. It is a defensive sector. So this ETF is doing exactly what it should be doing, staying relatively stable and providing a consistent dividend. CGXF, really good pick, obviously up 16%, almost 16% from the stock pick price. So right now it's at $13.28, and it's doing really, really well in the last couple of months, as we've seen, because of inflation and obviously market instability, volatility. That's when gold producers, anything to do with materials and gold and silver, shines. It's during stock market volatility. So this ETF is also doing exactly what it's supposed to be doing, shining during market volatility. So it was a good pickup when markets were high, right? It makes sense. So dividend unchanged. I would say it fluctuates, right? So we can't really say if it's increased or decreased. As far as Nexus REIT, really, really good pick. It's now $12.41. So you would have an increase of 53%. Really, really good. Dividend has remained unchanged. So Nexus REIT is a REIT that continues buying aggressively. I personally have already sold this one off, so to capitalize on other stuff. So which one of these are great pickups right now? Well, HUTL is really more of a defensive one. It's always a good pickup. CGXF, I don't know how much longer it's going to keep going up and up. If there's volatility and inflation, probably a little bit higher, but it has already picked up a bit. So is it a good pickup now? I would say probably, if you don't have any, but keep in mind there's HEP in a lot of the all-in-one funds from Hamilton, right? HDIV and HYLD. HEP is literally the same thing, or a competitor of CGXF with monthly distributions, but CGXF tends to have higher distributions. So that's why I kind of prefer CGXF individually if you just want gold producers. And of course, Nexus REIT, as you all know, I am slowly getting rid of all my single stocks, all my single REITs, especially REITs, because with RS, the real estate split fund from Middlefield, which has already the best REITs in there, that's really all you need. But if ever you want to capture a bit of growth as well, Nexus REIT is probably a good pickup now, because it's very focused on industrial. That's the strong point. So in terms of score, I would have to give myself an A again. Of course, this month everything is in the green. Some solid picks this month, so I'll have to give myself an A. Thanks for watching, everyone. I really appreciate it. Please show your appreciation by hitting the like button, hit that thumbs up button. It's free for you. It takes 2 seconds and it helps the channel grow. So it's a win-win. Also, if you like this type of content, this channel is all about investing for passive income. There's stock picks. I got a lot of great content coming up. I'm always thinking of new content. So make sure you're subscribed and hit that little bell button next to the subscribe button so you're notified every time a new video comes out. You don't want to miss my new content. We also have a website, make sure to check it out, passiveincomeinvesting.ca. That's where you could purchase my digital product, the ultimate DIY investing package, which is on version 3 right now. I'm very proud of this product. It's a companion tool, a reference tool to really help you build your own portfolio, whether you're a Canadian investor or an American investor. There's sample portfolios in there according to different investing styles, not just income, what I do, but there's also some growth and dividend themed sample portfolios in there. And it comes with lifetime updates. So you only need to purchase it once. So make sure to check out my website for all the details on this product. There's also a video there where I show from A to Z what this product is. So make sure to check it out. Also on my website, I offer right there on the homepage a one-on-one consultation service with yours truly, me personally. It's a 1-hour Zoom meeting face-to-face in case you want more personalized help, where I go over your situation, help you build a portfolio according to your own needs, answer all your questions, help you transition a portfolio. Whatever your needs are, I will do my best to help you. I love doing these sessions. I limit myself to 4 a week. They sell out very quickly, so I apologize for that. I know many of you keep sending me emails. I always miss the consultation. Well, I can't do more than 4 a week because I need the time also to create more content. So just look at the little message on the homepage there, right on top of the calendar, to get a status if the calendar is open or not. But I will let you guys know via YouTube community post and a Facebook post when the new appointments are open. Speaking of Facebook, make sure you join our Facebook group, which is almost at 10. We're almost at 10,000 members now and going up every day. So it's a nice little group where people post their questions, they put their portfolio, and we all try to help each other out when it comes to passive income investing. So make sure you join us there. We're also on Instagram. If ever you want to know a little bit more about our personal day-to-day life, you could follow us on Instagram if you use that social media platform. Don't forget, guys, the mission of this channel, my mission, will always be the same. It's to help everyday, normal, regular working people to invest on their own in order to build their own stream of passive income to enhance your quality of life and when they become financially independent. So how do I always leave you? Make sure to continue staying safe, stay healthy, and of course, stay passive. See you next time.